Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como, and today is the 21st of May already. Uh, this is Ireland Como Lafoy, our daily market update for Canadian agriculture. All right, let's get through what happened in the futures market today. Canola actually closed, at least on the July, closed down $2.30 to settle at 7.16. We'll talk a little bit about the dichotomy between the July and the November here in this video. So hang on for that. Minneapolis wheat up 6.75 to 6.04 and a quarter. Kansas wheat up 4.25 to 5.40 and a half. Chicago wheat up 3.25 to 5.49 and a quarter. Soybeans are up 9.75 to 10.62 and three quarter. Corn is up 6.5 to 4.61. The Canadian dollar is even up 41 points to 72.27. Live cattle up almost a cent, a full cent at 208.65, and feeder cattle up, or almost $1 per ton. Sorry, that's cent per pound. Feeder cattle are down about a cent per pound at 296.42. All right. Before we get into some pricing charts, usually we start with pricing charts. We're going to start talk a little bit about weather here. This is the 5-day forecast for Western Canada, total precipitation in millimeters out until Monday, May 26th. As you can see, pretty scant rains expected in the forecast for the next few days. A lot of these areas have been experiencing some dryness recently, some heat, and a lot of wind, which has been rapidly drying this crop. Now, it's been pretty good for seeding because we want some drier conditions to get the seed in the ground. There's the old adage, seed into dust, the bins will bust, whatever that saying is. I've never actually scientifically proved that or not, but maybe if you experience that on a regular basis, where if you seed into dry conditions and you get bumper yields, let me know in the comments, because I would love to know if that anecdote is actually true or if it's complete bovine excrement. All right. This is a map just a few days later, the 7-day. So just adding a couple more days into that. Sometimes I like to look at that because, the precipitation looks dry for a certain period of time, but then as you move through the calendar, it gets a little bit wetter. That's not the case here. There is some rains coming into the southern Dakotas and Montana, as you can see here, and some stuff in parts of central northern Alberta, but in a lot of the canola growing areas along the Yellowhead Highway and things like that, pretty dry. Most of Saskatchewan's dry, and most of Manitoba is dry as well. All right, just kind of looking at temperature anomalies here. As you can see, not too unseasonable for this period of time. This goes out into the next few days as well. So we're not experiencing dryness with extremely high heat. And in fact, the Corn Belt is seeing lower than normal temperatures. As we move out towards the 4 to 7-day, you can see that higher temperatures do kind of start to build in here a little bit. But, the thing with these charts, you can kind of create a map or a chart that tells whatever story you want. And so for those who are looking for high heat in the forecast, can find it in this chart. But when you look at, what it actually is, we're talking about 70, 75 degrees. It's not, that's Fahrenheit, of course. It's not scorching hot. It's just higher than seasonal norms. So that's what this is showing, which does create the opportunity for, a drying out effect, but not to the same degrees if we saw higher than normal temperatures in, mid to late June or early to mid July, those types of areas. So just kind of wanted to make you aware of that, but low precipitation. We got some higher temperatures creeping in the forecast in Western Canada as well. Looking back a little bit, here is accumulated precipitation into May 19th. That's a couple of days ago now. So these, this dark red area here north of Saskatoon has received less than 10 millimeters, or half half an inch. A lot of the brown areas have received half an inch. As we move up, or as we move south, it kind of gets more wet over the last, this is the growing season accumulated precipitation. So again, we're talking April 1st to May 19th here. Sometimes you look at this chart, this map as well, and you're like, oh, there's a lot of brown on there. It looks dry. Again, that's one of those things that can be deceiving based on how you look at the data. Here is a percent of average precipitation. I think this might be a little bit more accurate as of right now. As you can see, the Regina South area has gotten ample precipitation. Most of Western Manitoba has gotten ample precipitation, but north of that level is where we start to sneak into problems. That would include pretty much the entire Yellowhead corridor for the most part as well. So, not devoid of problems here. Here would be the Yellowhead as it ran through Edmonton, Saskatoon, and then down towards Portage La Prairie over here. So it's not devoid of problems. Still, dryness is a concern. I think it's worth talking about at this point um, until the forecast changes, because um, it could develop some risk factors here for this Canadian crop. So we want to keep tabs on that. Manitoba's seeding progress came out today. And so this is their fourth week of reporting now. The percent of normal is accelerated quite considerably here. So let's just see some highlights. The majority of the spring wheat acres have been seeded across the regions, with the Northwest sitting at 80% complete. Oats and barley are almost complete in central and eastern and the inner lake parts of Manitoba, with more acres still to go in the southwest and northwest regions. Corn is about halfway planted across the province, with the earliest seeded fields emerging and growing quickly due to the early accumulation of heat. So the heat in that case is helping the corn, come out of the ground. Canola is sitting at about 30% seeded across the province. Sunflowers 80, flax sitting close to 30. um, Pulses, soybeans, field peas, etc., is basically complete at this point. So Manitoba is well ahead of schedule. The rest of the provinces are ahead of schedule as well. It's just a good year to get seed in the ground quickly, and then we just hope for the right kind of weather. We're going to talk about some pricing charts here, but first, I want you to subscribe to our insights. We do have some stuff coming up that we're going to be estimating yields using some yield modeling information that we've been receiving to talk about U.S. winter wheat and those types of things. That will be shared only to our subscribers, our subscribed premium subscribers. So that's only $99 a month. You get all of our analysis. It will be really in depth as we get through the growing season, and you'll want to take advantage of that. You can cancel anytime if you don't like it. I don't know why you wouldn't, but it's there as an option if anything happens. So again, click on canadianagmarkets.com to subscribe. The link is always in the description as well. All right, price charts. I got a couple of interesting ones here today. Here's July canola intraday. And I'm showing this first because it doesn't quite tell the whole story of the daily chart doesn't tell quite the whole story. What we saw today in canola markets is here in through the overnights, we saw canola rise into, above 720. It touched, 725 or even higher here a little bit just before, or in the half an hour before the open, or within the hour before the open. As the market opened, even when I sent out my morning commentary this morning, the price still looked pretty strong. It was still, still trading at about 724. I must have taken that screenshot just minutes after the open, because after that we saw a pretty big fall in values. This is a 5-minute chart, I believe. So each candle shows about 5 minutes worth of trading here. And as you can see, it kind of jostled around here early in the morning, but continued to fade out. And then as we moved into the close, it actually faded out quite a bit. It faded out, about $10 a ton. From where, I would call the opening values kind of situating themselves. So overall, pretty kind of a weak day in canola. It's hard to see that here on the chart, and maybe that's a good thing for the bulls out there, because the candle was relatively small. It did actually kind of move towards a new multi-day high here. It looked like it was gonna, try to threaten those previous highs that we saw earlier, or in the closer to the middle of May. Um, but it did fail to do that. We are still trading over the 20-day moving average here. Again, I think that's an important kind of support level. As you can see, we kind of punctured through that earlier or later last week, but recovered pretty significantly. So we're still trading above that. The trend is still up here. It's hard to argue that. But I think this market is becoming a little bit more balanced per se than it was through March, April, and May. At least I have some theories that maybe we'll see some calls for delivery once this July futures market comes to expiry. We may see some buyers, some elevator companies stand for delivery if they're short on physical product, particularly in the July and August positions. So there's still that kind of in the back pocket. But having said that, they don't have to declare first notice or anything like that at this point. So the market isn't treating it as such. This is just simply on order flow, supply demand here right now, which is keeping it elevated, but a little bit more balanced, I guess, is the long story short there. November, a little bit of a dichotomy between the July and the November, as I was stating. November actually finished on a high note today, or close to the highs, and does look like it wants to push back up towards those old lows. It did not break, or old highs, sorry. It did not break the 20-day moving average. It did not break the trend line that was put in place earlier this spring. So, although this may be a slower, the turtle and the tortoise and the hare story, it still is advancing and still, from a technical standpoint, looks favorable for those who are bullish. All right, let's get in some other interesting charts today. Minneapolis wheat broke above the 20-day moving average yesterday, but continued down up that path and broke above the 50-day briefly today before settling just below that. 3 days of up movement here in the Minneapolis wheat market. I think for the most part, I think these wheat markets were just relatively oversold. We're kind of seeing some similar action here in Chicago, which did a similar thing, broke above the 20-day, tested the 50-day yesterday, and moved higher again today, but wasn't able to close above that 50-day. So we want to see some momentum that carries both of those markets above the 50-day. That would be great to kind of continue the momentum train there. But as of right now, it looks like we are seeing a bit of a bounce back. I did see some specials today from elevator companies. It appears that they are fading the basis as the futures have advanced the last couple of days. So the cash prices have still remained relatively stable, which is why we continue to advocate for separating basis and futures. I think there's a benefit to doing that. There's also a risk, but there's lots of benefits to doing that. It makes you more of a price maker instead of a price taker. HRW Kansas wheat is, again, similar pattern when you look at just the last couple of days of trade, but, still struggling to get back to those 50-day moving, the 50-day average has broken the 20-day moving average. So there still is some upside potential here. But as you can see, there's a long way to go here before we see it trade towards that cluster that it was earlier in the springtime. September corn had a good day. Excuse me. We did see some crosses over the last couple of weeks, like the 20-day and the 50-day moving cross that crossed over the 200-day. Those are relatively bearish signals. But if we can get this market to trade back above the 200-day, that would be a positive in my mind. I think that, again, corn was oversold. There's lots of speculators who are short these markets. And when they get spooked after a couple of days, they tend to, run, take profits, reduce risks, those types of things. Let it flush out a little bit, maybe re-enter their shorts. So I'm not saying this is a runaway bullish situation for corn or for wheat at this point, but we've definitely been seeing a bit better behavior from those markets from a farm standpoint in the last couple of days. Canadian dollar, just wanted to touch on that. I don't talk about it too much, but I do show its chart every once in a while, and it is included on our spreadsheet at the beginning there. It has found some foothold in the last couple of days, grinding out some gains against the US dollar. The reasons were the consumer price index in Canada rose faster than expected in April, signaling that the Bank of Canada's, kind of feverish rate cut cycle maybe over or maybe taking a pause. Canadian inflation accelerated again in April with the key CPI indicators rising more than expected. Um, the Bank of Canada has kind of been on a rate cutting tear, delivering seven straight rate cuts, including two, jump double cuts of 50 basis points since kicking off the cutting cycle a little less than a year ago in June 2024. So that means the Canadian interest rate has plummeted from its 5% peak. This is the overnight rate reached in 2023, dragging the central bank's key rate down to 2.75 this last March. So now that the Canadian inflation is kind of back on the rise, and Canadian housing prices apparently are not getting the memo that the Bank of Canada is trying to use rates to improve housing affordability, the Bank of Canada's window to cut rates may now have been closed. Now, I don't know who thinks that cutting rates makes houses more affordable. It makes those who have houses already allow them to afford it more. It doesn't necessarily make it more affordable for those looking to enter the housing market. I can attest there was a house on my street here in Winnipeg this last week that sold for $75,000 over asking price, and yeah, maybe that doesn't sound like a lot, but in this market that is a lot, and was a pretty shocking number. So we are seeing a lot of activity in the housing sector still, which means that's a big piece of the cost of living and a big piece of inflation, and something the Bank of Canada can't ignore. That's all we have for you today. Thank you for joining us. We will see you again tomorrow.